what is a CISD? Well, CISD is a change in state of delivery, commonly used to describe that order flow has changed. Now, at this point, what is order flow? Well, in the traditional sense, this is the real-time step-by-step record of all buy and sell orders executing in the market. But for our case, it literally refers to just how order blocks are being respected. And don't worry if this is not enough examples, we'll have plenty of time to kind of talk through this later. So as an example here, you have a bullish order block, price makes a new high, comes back into the order block, respects it. All right, boom, makes a new high. And right now, this entire thing here becomes a new bullish order block, comes down, respects it. All right, makes a new high. At this point, you have another bullish order block, price comes in, respects it. So in this sense, you can say that price is currently in bullish order flow. Now, this changes once that order flow starts to get disrespected. I'm going to show you this now. As an example here, prior to whatever happened here, price was actually bearish. Now, once you go from a bearish, kind of state of order flow, CISD happens when, for example, this candle here, remember an order block is a candle or series of candles before an opposing move, right? So this here is an order block. At some point, you realize that this order block gets closed through, gets disrespected. Okay, that gives you an early sign that, hey, a change in order flow might be occurring. The biggest confirmation comes when this entire block here, like for example, this entire block gets disrespected, price closes above, and now this entire thing becomes a new bullish order block. At that point, price retraces back into the CISD and continues onwards. Now you will also see another example of CISD here, right? Technically, in this part here, it's bearish. But at some point, price closes above this and turns it into a potential bullish order block, breaks above it, retests it, and price flies. If you've ever been in a situation where you look at the market and you're like, why is price pumping and dumping from these points specifically? CISD is the secret, right? Over here, bullish candles gets closed below. And prior to this, like you could argue that price was in bullish order flow. And then at some point that changes, right? Because this order block now gets disrespected. So this is a early CISD. And then over here, you have another order block that gets disrespected, and that becomes the undeniable CISD. There are two types of CISDs. You may have already heard it. One is early and the other one is undeniable. Now, they're both valid, meaning not one is better than the other. It simply means that, there are different conditions when you would use early versus undeniable. Early, when you're in a hotspot timing, right? Specifically, the news window. When you have news, read for the news specifically, the news window is the hour before news to the hour after news. That's when you use early. Undeniable is when the market conditions are a little less ideal. For example, if you're trading on a non-news session or non-news day, that is when you use undeniable. And I'm going to show you later, and I'm going to talk through my thought process when it comes to live trading so that you understand exactly which ones we're going to be using. Most of the time, when you get a CISD, you're never just going to want to be market ordering in right on the spot, because especially if you're trading crypto, on crypto, the fees that you're going to be paying on market orders are usually anywhere between 5 to 10 times that of a limit order, which is insane if you think about it, because, you're potentially going to run into a situation where I just faced this last week, actually, where I opened the position and what was supposed to be a $2,000 P&L ended up becoming $1,000 because I paid $450 in fees opening the position and I paid $450 closing the position at market. So try not to market order when it comes to crypto. But anyways, the way that you would use CISD is one, and this is most of the time, this is what I do. And you'll see that later. Unless you're trading on Forex, then market orders make sense. First one is limit order at the area where the CISD happens. Like for example, back here, the way that I would trade this is the moment the CISD gets confirmed, I would place a limit. So I would enter here, potentially stop there, and then target 2R. The second way is to trade with newly formed 5-minute order blocks, which I'm also going to show later. In fact, I'm going to show now. So with the limit, it's like, okay, over here is when the CISD happens. Prior to that, you were in bullish order flow. At some point, the bullish order flow changes. And the moment the CISD gets confirmed, you place a limit, stop at the most recent swing high, and target 2R or some relevant liquidity level. In this case, it would be this one right here during the Asia. So this is the first method that you would use a CISD, which is using a limit. Now, the second one is going to be momentum trading. And this is the part where I think a lot of you, or at least a lot of traders, kind of struggle with, because oftentimes entire concept of momentum trading is that if you think that the market's going higher, you, instead of waiting for the perfect entry or like to buy the dip, you're just going to buy high and sell higher. The opposite is true. If you think that the market's going to go lower, instead of waiting for the perfect kind of retracement into some key level, you sell low and then buy back lower, right? That is the entire concept of momentum trading. And this is something that people struggle with. But like, as you will come to see when we start live trading, you do not need to get a quote unquote perfect entry in order to make money. In fact, what is even a perfect entry? And you definitely don't need to catch the top or bottom either. And one of my favorite sayings in all of trading is top pickers and bottom pickers usually end up becoming cotton pickers, which is very true, by the way. Yeah, not going to get too deep into it, but just understand that it's perfectly fine that as long as we're confident with direction, which is again why we do that higher time frame direction thing. As long as order flow and everything still checks out and the market is still going lower, we're going to follow that trend because this is ultimately going to be a trend trading system. For example, all right, price does a CISD over here. In an ideal world, you would definitely place a limit at the line of the CISD, but ultimately price does not come back into the CISD. Oh, how do we adapt to that? We can see that at some point a new order block forms. And so once that order block forms, as long as we're confident that the market is going to continue lower, well, guess what? We're going to just take advantage of that order block. It gets confirmed on this candle, very nice candle, you retrace back into it, and off you go. That definitely gives us 2R, which, by the way, all of these targets are 2R.